You had mentioned about stuff about the economy. I would love to talk about that, especially insurance and how that's changing right now.
Sure. So the insurance industry right now, we haven't seen one since like this being a hard market since the Great Depression 100 years ago. So this is uncharted territory for most of us that are still alive today. Insurance is experiencing hyperinflation, just like every other industry right now. The issue with insurance is reinsurance. So an insurance company, take a big XYZ company, they carry a lot of the risk themselves, but they also use companies you've never heard of that reinsure them. So if there's a catastrophic disaster, a hurricane came through, and it's a $50 million claim payout for all the claims they had, they might be on the hook for 20 of that, but the reinsurance company is going to pay that 30. Reinsurance has doubled in price for insurance companies this year. In some situations, if it's a non-standard market, it's tripled. So the insurance company has to find a way to pass that cost along to consumers, because insurance is essentially a pool. You're just passing your risk into a pool saying, I'm going to pay this much. This is my risk. And if something bad happens, you're not just going to pay me back my $800 premium. You're going to pay the $40,000 claim. So to make sure that that's correct and they have enough money and they stay solvent, they have to reinsure. They also have additional costs. So when's the last time you had your car in the body shop where they had all the parts ready to go and it only took a week to get your car back? Yeah. It's a 3-month wait to get into a body shop now. They have parts delays. They have additional costs on all those parts. They have additional labor and supply costs. So all that gets passed on to the insurance company as part of the claim. Because again, the individual body shop owners can't shoulder that additional cost either, because they only get paid so much from the insurance companies. We have housing. Housing is a crisis right now. Cost of homes, cost of rebuilding homes. If you can find a contractor, I have a lot of good ones, by the way, if you need one. If you can find a contractor to rebuild a house or repair a house after you have a claim, it's going to cost 2 to 3 times what it did 3 years ago, between materials, labors, waiting for parts. So it takes twice as long as well. So there's a component on your insurance that is loss of use. That allows you to stay, say, in a hotel or a home while yours is being repaired if it's unlivable. That we're seeing a lot higher expenses on that end, because now rents are much more money, hotels are much more money. So every direction of insurance, whether it's auto, home, umbrella, any of those areas are experiencing such hyperinflation that it's having to be passed back to the consumer. And that means 20, 30% increases, 50% increases over the next couple of years. We don't know, because we can't forecast what's going to happen. Natural disasters are increasing. There's so many different factors influencing insurance right now that insurance companies are getting the underwriting department is saying, listen, we're only going to take people with no claims in the last 3 years. Some companies have shut down writing in certain states because they become unprofitable. You've had some bigger, right? Pulled out of California, pulled out of Florida, some pulled out of Colorado. There's wildfires and things like that in that area. Chances are the insurance companies are getting hit pretty hard with losses on home and auto, and they're scrambling to find ways of staying in business, essentially.
What's the average homeowner pay for, just to give people a bar to measure things from?
Sure. So it depends heavily on, so there's personal risk and then there's the property risk. So personal risk is your credit. Do you have a good credit score? Do you have a good insurance score? Have you had any claims in the past? Is there anything about your profile that's high risk? And then there's the property portion, same way. How old's the roof? Are there any high risk dogs? Is there a swimming pool? Do you have a bunch of kids like me? There's all these different factors that go into it. And then it goes by territory. So if you live in, say, Manchester and your neighbor's right next door and the fire department's rated a protection class 2, which, by the way, it's 1 to 10, the lower the better. 2 is amazing. Manchester does a great job. You take that and you go to a place like, up north, or even like Barnstead, right, where you might see your neighbor, you might not, through the trees. So if your house is on fire, is your neighbor going to see it, right? So these are all the things they worry about. Are you on a dirt road? Are you on a paved road? If you're on a dirt road, the access isn't going to be as easy in the winter as a paved road. So there's so many different variables. Just putting it in perspective, I would say the last couple years has ranged, and again, the value of the house is a big thing too, the replacement cost, but I would say $800 to $1,200 a year in homeowners insurance has been pretty average for, the average across all the companies and all the risks. $800 to $1,200 is pretty normal.
Right.
This year, So we're saying last year, right? 2022, 2023, that's 900 to 1,000. I haven't seen too many under 900 this year. 900 to 1,000 to about 17 to 1,800. So that's kind of the range we're seeing right now. So you can already see companies have taken rate increase. They've changed some discounts. They've done a lot of things to try and mitigate that payment amount and mitigate their risk so that they're only taking risks that they consider preferred versus standard or non-standard.
So if someone already has a premium, is their premium going to increase, or is this just on new purchases?
Everybody's premium is going to increase because, again, it's a pool. So it's a law of averages. So they have to figure out what they expect their losses to be for the year, and then they pass that cost plus a certain amount for profit and overhead and expenses onto the consumer, and then they factor in other things like, your personal information, like driving record, things like that, right, type of vehicle or home you have. Everybody's going to see increases. There's lots of industry experts out there that say 20 to 35% per year for the next few years. And that's if hyperinflation was to cease today and we just go back to regular inflation rates, right, which we're certainly not seeing. So
right,
that 30% might be 30% per year until, who knows?
Wow. That's just scary information, right?
It is. And it's a hard market. And this is why, you need an independent insurance agent. You need someone that's looking out for your best interest. Listen, the companies make billions of dollars, maybe not this year, but the companies make billions of dollars. I'm concerned about the individual clients like myself, that if my house burned down and I can't pull that money out of a savings account and pay to have my house rebuilt, right? Can't pay a $5,000 deductible because, I'm close to the water and that's what my insurance company gave me. So looking at your insurance policy, all homeowners, all auto, not created the same, not even close to being the same. And then some companies have different perks and different things that can help you in the event of a claim, and some really don't. So making sure you're protected properly is the biggest thing. And then price should be second. Value should be first, price should be second, but price is definitely becoming an increasing factor these days.